this stuff is coming down the track. There's no getting away from it. This is going to be normalized across the next 10 years or so, and being able to speak the language is critical.
Hello, Adam. Welcome back to Tav on Money.
Yes. Hello. Good morning again. And yes, it's good to be back.
I suppose there's nothing like a good controversy to get the new year going, but one of the things that we've been floating backwards and forward over the past few months is the conversation about how on earth the UK advisory community deals with conversations around crypto assets, Bitcoin, digital currencies. What's your sort of high level take on this to start with?
Well, I think we have to look at, to start with, the demographic concerning the advisory community, and this may be a little bit too sweeping for some people's taste, but the reality is that the overwhelming majority of regulated financial advisors in the UK are over 40, and therefore are not necessarily of a generation that has grown up regarding these types of assets as something that is normal. And because of their somewhat chimera-like qualities in terms of recognizing what they are, what they're supposed to do, they have of course attracted a considerable amount of controversy, and it is without doubt a truism in the world of professional investment that anything that can go up at the speed of, for instance, Bitcoin, can certainly go the other way just as fast. And therefore, for those reasons, these types of, and many other reasons to do with the regulatory perimeter and so on and so forth, but these types of assets are not currently particularly warmly received or even discussed within the professional advisory community.
I think one of the topics that I think is worth dealing with, and is sort of the flip side of what you just mentioned there, which is the demographic of the advisory community, and then the demographic of the crypto enthusiasts. There's potentially a conflict there, but I think there's something in the order of upwards of 3 million people in the UK hold some form of crypto asset. I mean, it's not an insignificant number of people.
No, and neither is globally the amount invested is significant. It's now north of $3 trillion. Dollars, mind you, but nonetheless, that's a very considerable sum of money, and somewhat equivalent to UK GDP. So we're not talking about a minor fad on the fringes here. I mean, we have to be clear, demographic works both ways. I mean, just the fact that the advisory community tends to demonstrate a particular profile doesn't mean that their clients don't. And the reality is that increasingly today, well, not increasingly, it's inevitable, it is a fact of life that today's 25-year-old will be tomorrow's client with substantial investable assets, who will probably want to be able to have a conversation around crypto assets, whether that's cryptocurrency, non-fungible tokens, whatever it might be, the whole blockchain, Ethereum thing. I think the reality is ignoring it and hoping it will go away is probably a rather short-sighted view. Not that I'm suggesting for a moment that one should go so far as to wish to be in a position to advise on these things, because A, at the moment you couldn't or shouldn't, and B, your PI insurers would run a mile if you tried to, let alone getting a knock on the door from the FCA. So we know that's not going to happen in the near future, although it does happen in other jurisdictions. I believe that Germany now has a regulatory framework which allows these types of assets inside the regulatory perimeter, which is quite interesting. I don't think we're near that position here, but nonetheless, I think advisors and advisory businesses would be better placed to display at least a working knowledge of these assets and how individual investors might feel about them and wish to participate in that particular investment marketplace.
Yes, and I think that, I mean, from a sort of self-serving point of view, any asset that over a period of 10 years has appreciated by multiple thousands of percentage points,
7,000%, I think.
yeah, something dramatic. I think it would, you know, these type of conversations have the potential in the long term to come back and bite you, because of course it's perfectly legitimate for somebody who is familiar with these type of assets to query why they can't invest in them in a regulated manner, and that would suggest that we would move towards regulation. But I think would be very curious as to why their financial advisor might not be able to give them a steer or be able to tell them how this wealth fits into their overall portfolio. There are lots of people sitting out there at the moment who are sitting on large amounts of wealth from their ownership of Bitcoin. Now, whether or not we like that or not, those are people who could transfer that money into regular assets and will need advice around that within the regulated environment. But they will want to talk to people who are familiar with the language surrounding this area. How do you think advisors could be best placed to enter into this conversation? I mean, what would you suggest advisors do?
Well, let's start with your first point, which was that the idea of ignoring this particular phenomenon has its own hazards, and clearly it does. The world is full of professional fund managers that turn down the opportunity to invest in Amazon and now feel rather silly as a result. So the parallels with the dot-com boom are there, insofar as much of it failed, absolutely, but actually the impetus around that particular period of time gave us where we are now, Web 3.0, and a kind of interactivity, digital interactivity, which was just completely inconceivable 15 years ago, even maybe 20 years ago. So this stuff is coming down the track. There's no getting away from it. This is going to be normalized across the next 10 years or so, and being able to speak the language is critical. As I said, advisors particularly are hostage to a number of factors, and we've touched on it twice now, but regulatory permissions are absolutely, and PI insurance means that in the near future, at least, there is no question they'll be able to advise on it. They won't, and I certainly wouldn't advise. That isn't to say that your second point isn't completely true, which is that the world is increasingly littered with people who've made quite a lot of money out of these assets, and understandably want to take some chips off the table and turn them into more conventional types of assets. They've built wealth and now they want to diversify, which is a very, very advisory style conversation. I mean, mitigating risk is really what we're all about. So, but that does lead us to another issue, which is currently in our armory of wrappers, i.e. self-invested pensions, self-administered pensions, ISAs, all these wrappers where the conversation swings towards tax planning. None of them can hold these types of assets at the moment for a whole bevy of reasons. So we're also hostage to that circumstance, that set of circumstances. So there are a number of architectural barriers in the system before this stuff comes into the mainstream. I say mainstream advisedly, comes within into our tent, as it were. But that isn't to say that we shouldn't be able to speak the language, which, picking up from what you were saying, if somebody wishes to have a conversation about encashing some of their crypto investments, I think they would expect, without any doubt at all, whoever they were interacting with to be able to speak that language and at least understand what it is they're holding and what they're disposing of.
Very, very interesting. I think this is a topic to which we will return consistently over the coming years, not least, as you just mentioned there, because as you know, people who are investing in these form of assets take chips off the table, that's a great deal of wealth to be managed and looked after. So I think there is a lot to unpick here. Just before we go, I think I'd be interested. I think we might be interested to just get your take on this kind of Wild West environment that there is out there at the moment. But do you know enough about this now to be able to have a sense of where it might go over the next 5 to 10 years?
I think Wild West is probably a good description, because this is a furnace of creativity, and creativity can often be stifled by regulation. So this entire area has grown up outside of any kind of regulatory or indeed governmental. If you look at how they operate, the whole point of them is that they sit outside of all the norms that we consider to be safe and respectable. It's one of the reasons why from the more traditional end of the investment community, such scorn and derision is heaped upon them, and yet underpinning it, there's some really, really clever technology which isn't going away. You know, a lot of this stuff actually works. Now, that doesn't mean that a lot of it will fail and a lot of prices are hyped, and I to this day still struggle to get my head around why someone would pay $3 million for a tweet. You know, so sorry, but you know, call me old, but I just don't get it. But nonetheless, they do, and you know, we have to be honest about these things. It's driven by sentiment, people believing that prices will go up. Well, newsflash, everyone: the value of most stock markets in the world are driven by sentiment. You know, these shares are not priced on a net asset basis. They're priced on the basis of what someone is prepared to pay for them. So Wild West it may be, but it's not so far away from the norms that it's completely unsustainable. But as I say, the advantage of being somewhat Wild West is the availability or the ability to be incredibly creative without having to answer to particular authorities. As they move into more mainstream, that inevitably will be suppressed somewhat, because regulators obviously their first role is to protect consumer risk, and you know, these are inherently very risky things. So personally, I feel that it's healthy where it is at the moment, because the vast majority of people interacting with it fully accept that they could lose a lot of money as well as gain a lot of money. Nobody's going into this thinking it's a sure thing. But nonetheless, they are somewhat evangelistic about the technology, and that's really interesting and really important.
Okay, well, listen, thank you. This has been excellent, and as I say, I think we will definitely return to this, because it feels like the next 10-15 years this is going to be a major theme for advisors, and offers a great opportunity as well as we move forward. So thank you very much.
You're welcome.